Welcome to another episode of Leaders and Founders. I'm thrilled to be joined today by Conrad Ford, Chief Product and Strategy Officer at Allica Bank. Welcome, Conrad.
It's good to be here.
Thank you for joining us. For the conversation today, I thought it'd be good if we break it down into a few parts. So initially, your early life and getting into your career, and then transition over to Allica and wider fintech conversations. So you had a bit of a different path to most, I guess, into the world of working. It'd be awesome if you could give us a bit of a background into that.
Yeah, well, I went to university, and there's a certain type of person that goes to university and has a very clear plan about what they're going to do after university, and go to the milk rounds and start preparing and all those things. I was not one of those people. I kind of stumbled blinking into the sunlight out after university without a plan at all. My only plan actually was I wanted to see the world. So I decided to go traveling and go and see the world. I ring-fenced 6 months of my 20s to go and see the world. And it turned out I was a slower travel than I expected. 2 months after I'd landed in India where I started, I was still on the same beach as where I'd started. So
Must have been a good beach.
It was a nice beach. It was Goa, yeah. Highly recommended, although I haven't been there for a long time. I discovered I was a slow traveller, and I didn't really develop any particular career plans. I was always assumed I'd be successful, so I didn't really put any thought into how that was going to happen. So yeah, long story short, I spent most of my 20s kind of travelling and doing contracts. It was a time, by the way, of a bizarre thing in retrospect, which was called the Millennium Bug. So there was a high conviction that the whole world was going to end when we turned the millennium, because computers would crash and airplanes would fall out of the sky. Long story short, it meant that somebody with basic intelligence could get lots of IT jobs. So I was doing IT contracts, not very advanced IT contracts, but IT contracts in the summer and then traveling in the winter. Long story short, I got past 25 into my late 20s, around 26 or 27, I got sat down by a fierce auntie who told me I was wasting my life. So told me to get a qualification. And then I got my first proper job, which was in investment banking.
And how do you think that's affected you compared to some others, both positively and negatively?
Yeah, well, look, I mean, I get reached out to for career and startup advice and many other types of advice a lot. Whenever it's somebody who's kind of like, massively fretting about whether they were at the age of 23, where they wanted to be in their career, I kind of say to them, it's a marathon, not a sprint. I would say the accidental positive element of my career path, which is a meandering career path, is probably the best way to put it, is that it's fairly recently become popular and empirically proven that people with what's called range over time outperform those that are very focused on one thing. It happens across a wide range of disciplines, including sport, by the way. Roger Federer was not always only a tennis player, for example. But for example, in science, very often somebody who's moved from one scientific discipline to another comes up with a breakthrough because they have a different frame of reference, they're different outside-in view. So range, in other words, people with a breadth of experience over their careers seem to outperform and achieve greater things. So accidentally, with my meandering career,
you meant to do that, definitely.
I absolutely didn't mean it, yeah. But that kind of range and breadth has meant that I have a fairly rare combination of skills and experience, which I've sort of tried to major on in my kind of more measured and thoughtful career phase that I'm in now.
Yeah, I think it's awesome though, because you don't probably hear enough of people who have done that. We hear about all these amazing founders that are in their early 20s building multi-billion-dollar companies, and it's quite rightly easy for people to look and think, I'm so far behind, but it's a marathon.
Yes, and look, I mean, Nikolai Stronsky, the famous founder of Revolut, has recently founded a VC fund, and I was listening to a podcast with him the other day, and he was talking about the VC fund. He's, in a very Revolut way, he's trying to build a new type of data-driven VC fund, so not people investing in friends they met at London Business School, which is how the current market works. And they've actually looked at the data, and for example, the most successful founders are kind of in their 30s, right? So then they're not too far into their career, but they're equally not too. And I think there's a survivor bias. We look at Mark Zuckerberg and think that magically halfway through university you drop out and become an amazing founder. These are such exceptional individuals. You're a very arrogant person if you think you're the same as Mark Zuckerberg. I'm certainly not. I'm never going to be Mark Zuckerberg or Elon Musk. Actually, statistically, you're more likely to succeed as a founder somewhere in between. Yeah. So, and it kind of shows it's a good idea to have made your mistakes on somebody else's dollar, I think is a good way of thinking.
It's a good way of doing it, yeah. And then briefly, that investment banking journey, obviously I guess, lit a fire in some way around banking? What was it like?
Well, I think that would be a massive overstatement. Again, meandering. It just was a place where you can earn a decent salary, and obviously something where the UK remains preeminent, amongst the top 2 or 3 in the world. So it's an obvious career choice for somebody ambitious. It is something where you have a competitive advantage here in London. So I wouldn't say at that point I was in love with banking. But yeah, I actually, the job I had at the time in investment banking, I actually hated. But I did figure out during that time that strategy sounded interesting. And I managed to get myself moved into a role that had strategy in its title. Not sure I was doing a huge amount of strategy, but crucially, I then got poached into a proper strategy role by another bank. So I spent a number of years in the corporate strategy team or the group level strategy team of a major bank. And that's the first time I had a job where I really felt I had a career. I was doing something I thought I was good at, that I found interesting. And actually, really there were consequences to what you did. Your PowerPoint did actually deliver outcomes in the end. So moving into strategy, it was the first time I kind of found, I thought, okay, I found a thing I'm good at now, and is valued. And strategy has been an integral part of my kind of career ever since. Hence my title, Allica has got strategy in it.
And then moving on to founder and founding your own business, was that born out of something that you saw within banking at the time from your strategy roles?
Yeah, I mean, I'd love to say that was the primary motivation. I mean, that was certainly in terms of the business idea, was obviously influenced by what I'd learned in the industry. I always joke that me founding a business was a midlife crisis, and that's only half a joke, because I'd said that I kind of, I'd always assumed I'd be successful, right? Then I found myself in my, I must have been late, at least mid-30s, and basically I was working in a large corporate, and that certainly wasn't the plan. I wasn't like disappointed with where my life had gone to, but clearly I was not going to dent the universe that way. So I had what I call a midlife crisis and decided to start a startup. And I think it's important to kind of note that was kind of the absolute peak of startup hysteria, I think, as a thing. My generation, we wanted to be rock stars, right? But every millennial wanted to be a startup founder because it had been popularized by Mark Zuckerberg, etc. That was the thing to be. So to some extent, I imagine I was influenced by that. But I kind of felt, that perhaps was the way I was going to dent the universe, start a business. And that kind of led to me doing it. And the business I founded is a business called Funding Options, which is effectively a comparison site for small business lending. So the thesis was really simple. At that point, consumer financial services, so how consumers buy stuff, had massively shifted towards comparison sites. So famously in the UK, Money Supermarket and their peers. But that happened in most Western economies. So in other words, given the opportunity to shop around the market online, consumers chose that as the point of call. And by that point, I think 70 or 80% of consumer financial journeys started at comparison sites. This is a thing that hadn't existed 10 years before because the internet hadn't existed. So I kind of thought, well, it must be that business, B2B, is going to move the same way. So I built a comparison service for small business lending. And actually, in the end, that kind of high-level bet was largely correct. But it was, as always, it was going to take 10 years longer than I thought it would. But yeah, that was my business model. In terms of market conditions, this was in the aftermath of the global financial crisis, and SME lending to small businesses was a news story almost every day, at least every week. So this kind of gap in SME lending, and my kind of thesis that maybe an aggregator could help solve that gap. The many specialist lenders out there, connecting them with the customers, that was a great business to build. So yeah, I was the sole founder of that business. I went from literally me at the weekends in my bedroom through to, by the time I left the business, approaching 100 people, and meaningful revenues as well. It wasn't a hype cycle fintech, it was a real fintech with real revenues. And actually, after I left, it got bought by a larger fintech business. So I can claim to be an exited founder, albeit I'm not flying home in a helicopter.
Yet. Sole founder.
Yeah.
Was that deliberate choice?
No. It depends what you mean by deliberate, I guess. I didn't spend a huge amount of time dwelling on that point. So it wasn't really a conscious decision. I didn't know enough about founding businesses at that point. And bear in mind these days, right, if you want to go and get schooled on startup founding, I mean, the quality of resources is just an order of magnitude better than it was. For example, the Lean Startup book that we're all told to read, right? I was told to read it, but it was, I didn't read it actually, I wish I had. I did read it in retrospect, but I
should have read this.
I need to punish myself, yeah. But the point is basically, these days, you absolutely would have read that book if you're a serious founder, right? But it wasn't a given then. The kind of structure and quality, the incubators, the accelerator programs, they were very much, the good ones were very much concentrated on the West Coast of America at that time. Now they've gone global, the Y Combinators of this world. So they're kind of like, I'm not sure I actually spent a huge amount of time thinking about it, nor did anyone flag to me it was a particularly important question. But the obvious question you're probably going to ask me is basically, on retrospect, what do I think?
You've read my mind.
Yeah, I get asked this a lot, and I have an answer that I'm very happy with. The only thing worse than being a sole founder is being a co-founder with the wrong co-founder. So in other words, it depends. So just think this through. If you co-found a business with someone who is not quite as driven as you or hardworking as you, and they're kind of clocking off at 6 p.m. and you're working till 10, right? You can do that for a week and let it pass you by. But if you're doing that week in, week out for 2 or 3 years, right, eventually that's going to cause such a huge schism in your relationship. You have to know that they kind of have similar motivations and values and drive to you. You have to know this with high conviction, and you also need to structure things such that if it turns out that despite everything you're wrong, that there's elegant, pre-planned ways that you're going to deal with an elegant divorce, almost like a prenup for your co-founding team. So there's lots of tools and techniques to navigate this. And again, the resources around that are better. Statistically, I've read that the most successful founding partnerships are people that have worked together. Second most successful are people who went to university together. And it did not surprise me at all when I read that, because these are people who've seen each other, seen their values, their working styles,
the best and worst,
their drive. Yeah. So if you've been on a university project with somebody, and there's always somebody who's basically freeloading and somebody who's doing all the work, imagine that times 10 for 3 years, right? That's the decision you're taking. So it's not a minor irritation, it's existential. So I kind of really, when I read that, I was like, that makes perfect sense. Yeah. So I would be very, very wary about being a sole founder, but I would never co-found unless I had really high conviction. These days, obviously, I've worked with lots of people who I think are amazing. I just need to convince one of them to join me on the journey if they go again.
And what was one of the biggest learnings from that journey?
Well, I joked about the lean startup, but I mean, really, I'd done something that I think is a very common error, and I suspect some of your listeners will make if they try this journey. So I'm going to be really clear about this. The stuff you learn in a large corporate isn't anywhere like as helpful running a startup as you think it is, right? In a large corporate, you're learning to drive a super tanker. In a startup, you're building a speedboat, right? Not just driving a speedboat, actually building one.
Whilst it's moving as well.
Yeah, exactly, yeah. So you must unlearn a lot of the stuff that's made you successful in your corporate or large organizational life if you want to found a startup. And the lean startup is, probably the cleanest elucidation of what needs to be different, right? Which is, do not assume, for example, if you've got a big, mature, established business and your problem statement is add £100 million to your 1 billion revenues this year, there's a small number of levers you can pull. You can analyze those levers and with a relatively high degree of confidence know that 3 out of 5 will work. You can't do that with a startup. So above all else, stop analyzing and get into the market and test quickly is the only way. Talk to customers, get live with customers as quickly as possible. If you're in a regulated industry, find a way that you can do it in an unregulated way, because you never break regulation. But above all else, test, learn and adapt. There's a book that's really heavily influenced Allica, which is called The Geek Way. It's kind of like, I guess it's the lean startup for grown up businesses. And it kind of breaks down why the different corporate culture that came out of West Coast America, it wasn't just tech startups. A different corporate culture has just wiped the floor with traditional corporates because they learn much quicker and they're more data driven and they're less hierarchical. And we think I would say that's a really good playbook of how you build a modern business.
And you mentioned Allica, so let's get on to them. What made you join? Why them?
Yeah, so I'd left the business I founded, and just to repeat something, I hadn't actually sold the business at that point. The business sold after I left, but I left the business in what I'd like to think was a decent state. I needed some downtime, to be honest. I was kind of done, right? Being a sole founder is absolutely relentless and pretty horrible, to be honest. Yeah, you have to be a glutton for punishment to choose that path in life, I tell you. I had a year off, and I did bits and bobs. I was advising some other fintech founders, most famously Anne Bowden at Allica Bank, one of our better fintech founders, but advising a few well-known fintechs. And frankly, I got reached out to so much by people saying, become a board director or an advisor in my tiny startup. And I was like, look, anybody that tries to get money off you at your stage of business, frankly, shouldn't be advising a startup, right? I'm bored. If you want to spend a couple of hours with me on a Teams call, let's do that. So I did that. I must have spoken to dozens of startup founders in that year, and hopefully helped a few of them to work through their challenges and questions. But yeah, I largely took a year off. It was the year of COVID, by the way. So yeah.
Good year to take off.
It was a good year to take off, yeah. And walked the dog a lot. Very nice weather that year, a lot like this year. So I'd had a year to think about what to do next, and I concluded at that time I didn't want to start another business, and I didn't want to be CEO. Now, at the time, they weren't never decisions, and they're not never decisions now, but that was my decision. I don't want to be CEO, and I don't want to found a business. And I may go back to one or both of those things at some point, but I was kind of thinking what to do next. And then unfortunately, I got reached out to by our Allica CEO, Richard. So Richard is one of the sort of premier names in UK fintech. So he has, believe it or not, been involved now in, well, if Allica turns out to be a unicorn, watch this space, the fourth fintech unicorn. So he was number 2 at Revolut. He was the original CEO of Oak North Bank, and he's on the board of Zepf, better known as World Remit. So he's got a fairly stellar fintech track record. He and I knew each other from my corporate strategy role at Barclays Bank many years ago. And he said, I'm going to go and take over as CEO of Allica Bank. Do you want to come along? So that was it. Felt like the right thing for me. He's an amazing CEO. I like him, I respect him. I thought if I'm going to work for somebody, and the obvious outcome of deciding not to be the CEO is you're going to work for somebody, I'll work for him. So that was it. It was right thing, right time. And I also believed in the business opportunity as well. I'd kind of learned in the business I'd founded about the opportunity that we go after at Allica. So I had high conviction in that as well. It's turned out to be true.
Yeah, it's doing a pretty good job so far. What do you think drives that? What separates you from others in this?
Yeah, so for those that don't know, I mean, we've had a burst of pretty much winning every accolade there is, but we're currently the fastest growing startup in Europe is our current, and Bank of the Year, by the way, City Bank of the Year. I'd say 2 things. So the first one is culture. We have a modern business culture, which above all else is a focus on execution and values. So, if you want to build a great business, you must have the right people with the right values, and you must empower them. I hate that word, but empower them to get on with their jobs. You've got to be the opposite of sort of big bank corporate culture, which is these people almost...
Just to pick apart on that, you said you hate that word empower. How do you do that?
Well, let's talk about how the incumbents would do it, most of the big banks. Not all, but most of them. The people who rise to the top of the big banks, and again, most of them, not all of them, are sociopaths, basically. So they rise to the top because of their sharp elbows, their turf wars, they're basically politics and backstabbing. So the kind of people who rise to the top, generally, not always, they tend to be motivated in their careers by the wrong thing, right? It's about power. It's about authority. You cannot build a great business on those principles. And actually, you can go back decades to know this is true. So there's a very famous business book called Good to Great, which I heartily recommend, by the way. If you're going to read one business book, read this book. Now, I didn't read it for a long time because I assumed from its title it was some rah-rah American bullshit book, right? It's actually the opposite of that. It is American, by the way, but a team had got together and spent 3 or 4 years studying the data of the companies that sustainably beat the indices in America, and begun to look at the shared characteristics. And it turned out to be very counterintuitive, right? You would assume that those that outperformed over decades were in sexy sectors. Not true. Any sector. Yeah, they found examples in every sector. They had humble leaders. They had a very clear sense of vision and direction. They didn't worry about giving staff canteens or beanbags or ping pong tables. What they found is colleagues are motivated by a clear direction of what they're meant to be doing, and given the authority to actually go and be trusted to go and execute. And basically those people that don't share the right values, so they may be amazing at sales, but they don't have the company values, are dealt with. Yeah. So a zero tolerance of values, almost like a balanced scorecard view of people, right? It's not just about delivery, it's about you and your contribution to the wider culture. It's that is the thing, right? We have a very clear sense of direction. We have our North Star, And we will very commonly say, right, if you're facing a decision, you don't need to come and ask us, does it match the North Star? The North Star is to be the most recommended business bank. Yeah, for a business bank, we want to be the most recommended business bank. So facing a decision, which is more likely to achieve that outcome? There you go. You don't need to come and ask me. Yeah. So we've got our North Star, which then breaks down to 4 company level sort of categories of OKRs or KPIs in traditional terminology. So one of those is to be the most recommended business bank, another is around efficiency, another is around risk. But effectively, what should be the case, and is largely the case, is you can be the most junior person at Allica, customer support or a junior developer. You should be able to map how the thing you're working on right now moves you towards one of the company level objectives and towards the North Star. Okay, so a clear sense of direction and people understanding, and then people are allowed to actually go on and get on and achieve the outcome that the business is trying to achieve. So if you're doing product development, we don't sit down and plot out a detailed roadmap every quarter for the teams. We set a set of objectives. Your job is to move customer satisfactions from X to Y and efficiency from Y to Z. So go figure out how to do it. Yeah. So we have ring-fenced product development teams focused on those outcomes. So that's what empowerment means. It's a discipline of stopping yourself from being a micromanager, stopping yourself from thinking you know the answers better than people on the ground. Neither of those things should be true. So that's that. And then the other one is strategy. What is it about our strategy? Firstly, we're very focused. We're focused on a particular segment, which we call internally established SMEs. So it's the larger SME segment. Ordinary consumers and tiny businesses, micro businesses as they're often called, are very well served by incumbent banks. Our segment's really poorly served, but it's a third of the economy. So we're very focused on a large part of the economy that's really poorly served by the incumbent players. We pursued what are popularly called a blue ocean strategy. So there's a book called Blue Ocean Strategy. And basically the thesis on blue ocean strategy is that most businesses and most markets are a red ocean. They're a feeding frenzy. Yeah, you can picture a red ocean, sharks, feeding frenzy. Occasionally a business creates a blue ocean, a brand new market. And you can guess what a blue ocean is. You grow very quickly and you basically create new demand. There's all kinds of examples given in that book, Blue Ocean Strategy. Cirque du Soleil is one. They created an entirely new type of entertainment. So it was a bit like a circus and a bit like a theatre. It had the pricing of a theatre and it had the cost base of a theatre, but it had the attractions of a circus. So a Blue Ocean Strategy and a laser focus on one customer problem is how we've succeeded.
You mentioned about that rapid growth, obviously, in the blue ocean. How do you keep up with that? Because that's where a lot of companies fall down, is they have that huge period of growth. They can't sustain it or struggle and drown.
So I would say, I mean, this is now actually, we missed a small step in my career path, actually. Allica's now the 3rd time I've been involved in one of the fastest growing companies in Europe. The second time was my own startup. Allica is the 3rd, but there was another one before that. So I've been on the leadership team of 3 of the fastest growing companies in Europe now. And I've kind of begun to get a thesis of how you deal with scale. So I think there's kind of 3 transition points. So the very early stages of business, when there's typically less than 20 people and probably more like a dozen people, you as the CEO or the senior leaders know everybody in the business, right? And the best possible thing you can do is basically hire very committed, driven, and reliable generalists who are smart, right? You can't afford to have a world-class SEO specialist, so get someone who's going to go and figure it out, is driven, is committed. So you're trying to assemble just a really high quality Swiss Army knives, basically. And then you transition out of that startup phase into kind of the first scaling up phase, where it typically takes you from maybe a dozen to 20 people up to probably somewhere between 75 and 150 people. That's the second scale up phase. At some point, you're going to find out you don't know everyone in the business very well. Yeah, and it happened for me, by the way, in the business I founded. There was one day I walked into the office and there was someone I hadn't seen before sitting at a desk. I was like, "Who's that?" And they said it's our new hire. And nobody had thought it was the first time they'd ever hired someone without me interviewing them. Yeah, it wasn't like there was a rule. It just suddenly, it's the first time someone was.
At least you noticed on the first time.
I did notice, yeah. But the point is just this sudden realization, okay, I can no longer personally vet everything here. I can't personally know everyone in the business well enough to know. So you then need to focus on the next level down, right?
Was that scary for you as well? Realizing that first moment that you can't vet everything and you have to trust?
It wasn't scary, actually. It was just made me think. And I kind of thought, well, this has to be true. Yeah, clearly we can't keep scaling, and I can't interview everyone. I certainly can't get to know everyone well. So no, it kind of, it was a learning point for me, actually. It's probably the best way of putting it. It certainly wasn't scary because I trusted the people beneath me, right? So the person who'd made the hire thought, well, why not? So yeah, kind of at that phase, you focus on the level directly beneath you, and you'll highly likely have to upgrade that level beneath you because the Swiss Army knives will no longer cut it. Some of them will be able to make the transition, but most of them are not going to be deep experts in the thing they're responsible for. So at that point, you probably need a professional CMO. You're going to need to have some difficult conversations with the people who've got you there. You need to tell them, look, you're not going to have the senior title, but I really hope you stay around. We're going to get someone in above you. And I, by the way, I had that conversation way too late. And when I did, I wish I'd done it earlier. So we're well past both of those stages at Allica. After that, it doesn't even work if you focus on the people directly beneath you, because Allica's now 750 people. It just doesn't work. The only lever you've got left to pull is culture. Yeah, culture and values. So you must reinforce the culture and the values. So that's the one lever. You know, there's going to be many people in Allica, hundreds of people I don't know. Yeah, it's the culture and values. How do you make them stick? Yeah. So let's just talk through a number of levers we've pulled in recent times. So the first one is rewrote the values, right? So up until about 18 months ago, we had the kind of values you expect every bank to have: integrity. The problem is, everyone like me who works in a big bank knew that this stuff was just shelfware gathering dust, right? Because they'd all seen the the high performing trader basically just being, they could do whatever they wanted. They could wolf whistle, because basically regardless of what the values said, the reality is nobody touched the people who made lots of money. So everyone knew the values were crap. So we rewrote the values. It was actually my idea, by the way, in such a way that anyone come from bank were like, okay, I've never seen bank values look like this. Yeah. One of our values, it says no preening. Yeah. It says others measure their worth by headcount, titles, and meetings they attend. We value the outcomes you deliver. So just really clearly signaling, if you're that kind of person, you're a big bank person, stay away from Allica. Yeah. If you're going to be like, I want senior in my title, yeah, it's not for you, right? Because nobody cares at Allica. So we rewrote the values. We brought in an Amazon concept called bar raisers. So everybody of a certain grade, pretty low grades at Allica, gets a bar raiser interview. Somebody like me, I'm one of a small number of bar raisers. We will interview from outside the team and actually just look at one thing: values. So if I'm doing a bar raiser interview on a software developer, I'm not trying to figure out how good they are at coding. I'm not qualified to tell that. I'm looking for the values. Are they an Allican? Yeah. So bar raiser interviews to try and reduce the number of people with the wrong values getting into the organization. And then performance management has to be around the values. So it has to be mathematically true that you can be the perfect on delivery, but if you don't have the other values, then you can't get a good rating. So you have to make that mathematically true, no exceptions. So it can't be the case that the highest performing salesperson can get away with anything. They literally will get marked down. So just everything is about culture and values above a certain point of scale, and that's the problem statement I spend a lot of time thinking about at the moment.
It's nice to hear somebody who actually has clear values, not just, like you say, integrity or kindness and the fluffy stuff, or trying to fix culture with free pizzas and ping pong tables, yeah, which I think we reached at one point with trying to copy Silicon Valley startups offering free lunches or weird stuff in your office. But the reality is, if you don't have a good culture and people don't enjoy coming to work and feel like they're working towards something valuable, you've just wasted a lot of money on a ping pong table.
Yeah, well, actually, true story. We have a table football table at Allica in our London office, and nobody ever uses it. And one day I decided I'd show people it's okay to use a table football table. And it just felt really awkward. You're just making noise because everyone just heads down doing their jobs.
Do people use it now?
No. I've literally, the only time I've ever seen it used is me trying to demonstrate it was okay to use it. That's just not our culture. And by the way, there's nothing wrong with ping pong tables and football tables. The point is basically people join Allica because they want to be challenged and stretched, right? And there's few places more challenging than stretching than the fastest growing startup in Europe, right? That's what people want to do. They want to achieve great things in their jobs, right? they can play ping pong in their spare time if they want, I guess. But the point is basically that's what they're choosing, and I want them to be choosing that, right? I'm very open in interviews, by the way. I tell people the warts and all, yeah. And interestingly, for example, we've had a data point for a while. We do our employee NPS. Would you recommend Allica as a place to work? Is extremely high, but very often you get people in the narrative section of our colleague surveys will basically say along the lines of wouldn't recommend it for everyone. So in other words, they wouldn't necessarily recommend it to a friend because if the friend's not there for that, yeah.
That's what you want though, right?
Yeah. There's many places. Yeah, it's funny actually. If you go back 2 years, I had an epiphany. So we knew that there's all these indices of the fastest growing companies in Europe and the UK, blah, blah, blah. There's quite a few of these things. And we knew that we were going to be right up there because we had extraordinary growth. So there's one that's produced by Deloitte. And we knew that we had the fastest growing of Deloitte's of this century, to be clear. So we were kind of like, it looks like we're going to be number one, but we don't know for sure we're number one. Yeah, until the indices come out, but it looks pretty sure we're going to be number one, but we are definitely in the top 5. Yeah, mathematically it has to be true. And there are 5 million companies in the UK. So I said, look, so we are literally 1 in a million. Yeah, there's 5 million companies, we're in the top 5 by growth, 1 in a million. Yeah, you are choosing to join a 1 in a million company. Yeah, think about that. Yeah, if you don't want to be stretched and challenged, there's 999,999 other companies you can go and join. And I think it's important to be open with people because they need to know what they're choosing to join. And you know, people get excited about joining a startup, but it really isn't for everybody, just as founding a business isn't for everybody.
And obviously during those interviews, is there anything that people have said that stands out for you consistently? Is there anything that makes people stand out?
Well, I've got my own interviewing style, to be honest. So when I was in corporate life, I was trained in all the conventional things, most famously competency-based interviews, where you're literally meant to say, yes, think about this from your side, right? Tell me about a situation where you faced a challenge and you overcame it. Yeah. That's literally what you're meant to do in an interview. I've concluded that the interviewing techniques you're taught in large organizations are designed to eliminate really bad hiring decisions. Yeah. But actually they then have a bias towards average. Mm-hmm. Yeah. And I'm not there to choose average. I want exceptional. We're 1 in a million, right? So I want exceptional. So I've kind of scrapped all that stuff. And what I try and do in an interview is I try and find a little thread of greatness in somebody. Yeah. And I always give the analogy of when you got a thread on a sweater and you start pulling it and the whole thing
unravels.
Yeah. And occasionally you get somebody where the first 30 seconds of an interview, you're like, oh, this is a definite hire. Let's just shorten this one. And then you find the thread, you start pulling, you're like, oh my God. Yeah, 0 chance I'm hiring this person. Yeah. Very often, by the way, it's somebody who has superficially all the stuff, top business school, top university, blah, blah, blah. But whenever you talk about the stuff on their resume, on their CV, it's always a thing they're involved in, but you can't get them to tell you what they did. Yeah. And you begin to think, I think I know this person. Yeah. This is the kind of the person who kind of hangs around and takes credit. Yeah. But actually the nice version of that, which happens more commonly, I'm glad to say, is very often you find somebody who superficially is kind of like, why has this person been put in front of me? Why is HR putting this person in front of me, right? You read their CV, you're like, oh my God, right? Either there's nothing obviously impressive, or more likely it's a terribly written CV. It's basically a task list, right? Yeah. They're not talking about their outcomes and stuff they've achieved. They're literally just responsible for X, Y, Z. You're like, oh my God. And you're like, how am I going to string this out for 10 minutes even? And then you sort of find something and you start pulling, you're like, oh my God, right? So there was somebody, I couldn't see anything on their CV that was worth talking about. So I went down to the bottom and they'd organized a festival at university. Well, okay, I'll talk about that. I can string that out for 10 minutes. Turned out they'd organized a festival on their own and tens of thousands of people had turned out. And I was like, 0 chance I could do that, right? I want that person in this organization. Yeah. Another one who's currently works in one of my teams, they'd been in one of the military cadet things and they'd been put in charge of 800 other cadets. Like, oh my God, right? Somebody else who works for me at the moment, she was sent down to the Antipodes to set up the operations of a company on the other side of the world. She was sent down on her own by the founding team of the company she was in when she was in her mid-20s. I wasn't even trusted with the office photocopy when I was in mid-20s, right? You kind of look for those little things, right? And another one we had from my prior company We had a developer who couldn't get an interview because they had terrible GCSEs. They weren't getting through the filtering. The reason they had terrible GCSEs is they spent their teenage years coding the Firefox browser. So
It's a pretty good excuse.
Yeah. And they wanted a job as a coder. I mean, who's not going to have that person as a coder?
I guess that brings on an interesting point. We're naturally going to push more towards AI usage within screening and hiring processes. How do we avoid missing out on those sorts of people who naturally will not get past AI?
Maybe they will. Maybe isn't that what AI does for us, right? It finds unexpected.
I guess. And I guess it depends on how you're training things.
The reason it seems to have turned out to be so good at coming up with new medicines, for example, is because it comes up with unexpected outcomes that we wouldn't otherwise. So let's just unpick that a bit intellectually. It's a good question. Generation 1 of AI, which wasn't really AI, machine learning, was around backtest from previous results and tell me the sort of things that would have indicated it. Therefore, if the outcome is wrong, then it's just going to replicate and scale up bad decisions. Generative AI, the clues in the title, imagines stuff, right? And famously hallucinates stuff as well. But the point there is basically it's probably less bound by preconceptions and less nailed down by previous errors. I'm not sure it necessarily goes that way. As with all things, that it's how you use the tool and to what extent you completely rely on the tool. But I think by its very nature, generative AI is designed to come up with unexpected outcomes. Therefore, perhaps it will actually help with that problem statement. I don't know.
Good answer there. It gives hope.
Yeah, it does.
What do you think you have got, obviously, fastest growing company in Europe? What do you think you've got right that others have got wrong?
I don't think you can say a single thing, but basically, fintech, because it's been such a hype segment, there's a lot of tourist capital that's come into fintech. And what I mean by tourist capital, people don't understand financial services. They don't understand the regulatory constraints. They don't understand how financial services companies make money. So things that superficially look like a really good idea have got a lot of investment capital that are really dumb ideas. And you still have quite a few alleged unicorns that frankly will never make any money. One of them is rumored to be up for sale for not a unicorn valuation right now, right? So the art of fintech is balancing the fin and the tech. If you look at our leadership team, and most obviously our CEO, he's a banker and a fintech specialist and a tech specialist. So he didn't just work with Revolut, he also worked with HSBC. So he's kind of got that balance thing, but it's true of our leadership team as a whole. So it's the balance of the fin and the tech. We were one of the fastest fintechs to profitability in the UK because we understand how financial services companies make money. And we also deeply understand the regulatory constraints and barriers. Now, it's really important not to get too complacent on this. I would hate if this came across as complacent. But in our world of SME banking, there have been quite a few players claiming to have frictionless onboarding, for example. If you have frictionless onboarding in a more complex SME segment, there's no such thing as frictionless. In other words, you're not doing your anti-money laundering properly. You're not checking for terrorist financing properly. In other words, friction is a necessary part. It's also true of lending as well, frictionless lending, right? There needs to be a bit of friction. You can get a takeaway curry or buy now, pay later. That's not a good thing for society. That's not a good thing for consumers, in my view. You can get pissed and buy something on buy now, pay later for £50, right? If you can't afford that curry, you shouldn't buy the curry. You should get some toast from the fridge, which is what I did when I was young and drunk.
Pot noodles.
Pot noodles, there you go, pot noodles. I think we understand that friction matters, and we also understand how financial services companies make money. I think that really matters. It's how you balance the fin and the tech, I think, is the art of fintech.
That's really interesting points that you've raised there around, I think, particularly the BNPL stuff. Like, we've only just had regulations come in to tighten down on that. Do you think there's too much of a concern from some companies of customer acquisition growing rather than looking at what is right and what should be done?
Yeah, I mean, in the end, these things are never objective, right? I mean, let me use an example that's long ago enough in history that it's not stamping on any toes. The payday loan segment, most famously Wonga, basically got killed by political pressure. You could make an argument that those people borrow anyway, and now maybe going to loan sharks with baseball bats rather than going to high interest loans. I don't know whether that's true, but my point is basically there's never simple answers on these questions, right? If somebody desperately wants to buy their kids Christmas presents and they don't have the money for it, right? Or their fridge breaks down, they have the money for a new fridge. Unfortunately, people will tend to go to whatever it takes to get the money. Therefore, these things are never simple answers. Is my genuine perspective on it. But regulation, whether it's right or wrong, is a red line. Yeah, organisations that ignore regulation, they absolutely should be dealt with, because otherwise it's not a level playing field.
Good answer.
Yeah.
AI. Everybody loves talking about it. Obviously, I'm no doubt it builds into your role within strategy. What's your view of AI, particularly within fintech, but at Allica at the moment?
I'll talk about Allica, because I don't feel particularly well positioned to talk about other segments. So I think about AI, when we say AI, we're talking about generative AI, the thing that's just happened, right, in the last 5 years, not the many things that have been called AI in the past. I think there's 3 waves for Allica, and I think we're currently getting deep into wave 2. So wave 1 was personal productivity. So most famously, software coders, if they adopt Copilot type tools, become a lot more efficient and effective. That was kind of wave 1. I think we're getting towards the end of wave 1. So in other words, if let's say you're a software developer at Allica that's not adopted that stuff for whatever reason, because you're Luddite or whatever it may be, then frankly, very hard questions need to be answered, because it's fairly unambiguous that works. The question is how much you use it and how much you rely on it. Wave 2 is wider business efficiency. So in other words, it's not around an individual being productive, it's around things that we do a lot of that basically waste lots of calories because they're too manual and poorly thought through. So the really good example in our world that's really easy to digest actually is PDFs. So our world, lending to a complex, larger SME, involves lots of third parties, right? It's not like a simple payday loan where it's just me and my website and the end consumer. We have accountants, we have solicitors, we have surveyors, all these participants. All of those work to their own processes, and there's a lot of what they do is regulated or quasi-regulated, so they have to be a certain way. That world did digitalize over the last 10 years, but it digitalized onto PDF. 10 years ago, they were sending faxes and doing wet signatures. Now it's PDFs and e-signatures. And COVID accelerated that. So it did digitalize that kind of world that we inhabit, but everything moved on to electronic versions of paper documents, physical paper documents. And there's huge amounts of wasted calories in duplication of those documents being emailed to lots of people reading through long documents. So for example, if we're lending against a business's shop, for example, that they bought or want to buy, then we'll get a long survey report. But if it's well within risk parameters, loan to value, it's a simple, high quality piece of premises, we're probably not going to worry about every word of that survey. We want to know the value and the EPC rating, which is energy efficiency rating. A lot of wasted calories in going and finding that data. So PDFs is one area where generative AI is more than capable of just accelerating and actually outperforming humans, by the way. So one mistake that incumbents make is they say, well, PDF, reading of PDFs, it's only 95% accurate with generative AI, so we can't do that. Well, compare that to people, yeah. So to some bored university student at the weekend, right? How accurate are they? I bet they're not 95% accurate. So at the moment, where we're wasting calories and we can basically automate and make ourselves more efficient is where the focus is. And then the third wave, which I'm one of only less than 10 people focused on the third wave, is reinventing the bank. A new type of intelligent bank is how I think about this. So let me give a real example. Our customers, so a typical Allica customer would be a business with 20 employees on some industrial estates, hidden away in some industrial estate outside a small town, somewhere outside of London. That's a typical Allica customer. They are big enough and complex enough that they need a treasurer, which is somebody who looks after the money, moves the money around, checks there's enough money, blah, blah, blah. They're nowhere near big enough to afford one. Only big companies have to go over a treasurer. So they're kind of stuck in the middle. They need a treasurer, but they're a fraction of the size to justify a treasurer. What if your bank thought like a treasurer? What if your bank thought ahead and said, well, look, looks like payroll is going to be a bit tight in October. Let's make sure that we've got an overdraft to cover it. We're going to need £200,000 to pay a tax bill in September. Let's put it aside, make sure it's waiting there and earn some interest in the interim. So what about a new type of bank that thinks and acts like your own treasurer? What about a bank that integrates with and works alongside your favorite tools for running a business like Shopify or Xero, whatever it may be? A new type of intelligent bank. That's how I see. That's how I see generative AI changing our our future. But that's a multi-year vision.
That's really interesting use case I've not really heard of before. The last one, sort of stage 3. Would you say you're in a better position than most to be able to actually execute that?
Only because of culture and ways of working, right? I don't think I wouldn't claim to have a technological advantage. I mean, true AI experts, right? There's probably, generative AI experts, there's probably less than 1,000, and none of them are working for a bank, I can tell you that. They're all working at OpenAI or Meta, right? In that respect, no. It's all about culture and ways of working. What are the big banks going to do? They're going to stick 20 people in a WeWork, 20 MBA students with chinos, give them bean bags and ping pong tables and say, go innovate. Yeah. And they may innovate some amazing stuff, but it's not going to change the bank. Yeah. In other words, it's innovation theatre. Yeah. It's a fintech petting zoo is what they're building. We will do controlled, disciplined bets aimed at the core of the bank. Yeah. I'm already standing up those bets, right? So they are controlled, they're two-way door bets. So in other words, if it doesn't work, we shut it down with no consequences, but they are controlled bets around a set of thesis. So for example, the treasurer thing, right, we'll do more than one bet because it's so fundamental to potentially the future of our industry. But the point is basically it's controlled bets, but they're aimed at the bank itself, not innovation theatre. There's nobody going to be sitting in a WeWork innovating.
You're not just going to be stuck with loads of different potential innovation pieces and prototypes and never make it outside.
Yeah. And I think the kind of wave 2 is a good example, right? We know that PDFs is a huge waste of calories. So we build, we MVP, we test alongside real human beings, and then there comes a point where hopefully you're demonstrably outperforming human beings and you make the switch, right? It's those controlled, disciplined bets is what defines a great company.
And if you're, whether it's early stage founder or somebody looking to start, what's some of the biggest opportunities for fintechs at the moment that's whether incumbents can't compete on or you just don't think they will?
Yeah, I mean, so obviously the obvious answer is AI, and I'm not going to say AI because it's the obvious one. I am actually personally, by the way, this is not an Allica answer, it's a Conrad answer. I'm extremely excited about stablecoins. I'm also really depressed about stablecoins because the UK is so far behind. The US has just passed a law that basically makes stablecoins a thing, right? Literally from the moment that law's passed, we're playing catch up, right? Every day counts now. And I have a horrible feeling we're going to have many years of consultation papers and that sort of thing. Why do I think it's so profoundly important? I think with stablecoins, we enter the third wave of fintech. And it's the big wave, not the rest of them are inconsequential. So the first wave I call lipstick on a pig. It's basically people building cool apps on crap infrastructure. Yeah. Now, I'm not saying Monzo's infrastructure is bad, but the payment rails, the market payment rails is all rotten and old fashioned, right? So in other words, you can build cool user experiences, but in the end, you're building on poor foundations. The second wave was opening up data sources. So open banking being the most famous example. But basically you opened up new data sources and those data sources and APIs basically allowed you to offer more choice, more interoperability, etc. And that wave has been more fundamental than the first wave. But stable coins is potentially the infrastructure by which you reinvent the core of financial services. So if you worked in the city, there's literally hundreds of thousands of people doing these smart people doing high-paid reconciliation jobs because there's long settlement timelines, there's ambiguity about trades, there's ambiguity about contracts. The underlying technology of stablecoins, smart contracts that are immutable 24/7, allows you to basically completely re-engineer how the fundamentals of financial services work. It allows you to re-engineer the core of financial services. All of those non-value-added jobs go away and the outcome for customers is dramatically better. So I think this is the big wave for fintech. Part of the problem is because they have this strange name, stablecoins, and because it's associated with crypto, it's kind of seen as this, the kind of the embarrassing part of the fintech family. But they're called stablecoins precisely because they're pegged to the value of something, right? If you peg to the value of something, typically US treasuries, you can't speculate on them. Stablecoins were created exactly to eliminate speculation. Therefore, they only exist for real world use cases. And the real world use cases are very clear to me. It's profoundly important. By the way, I think the incumbents have as much chance of winning as the challengers in that world, by the way. JP Morgan looks very advanced on stablecoins, for example. Yeah, we'll see. But I personally think that's the most interesting thing in financial services at the moment.
Okay. And you mentioned about our approach, I guess, as a country to stablecoins and that fear with it being tied to crypto. Do you think potentially our risk appetite harms us at times?
Yeah, I mean, slightly shaky ground here. As a participant in the market, if I was in charge of policy, not regulated policy, in other words, I was in the government, I'd literally say, you have until the end of the year to demonstrate why we shouldn't copy the Americans. Yeah. For the avoidance of doubt, the general view in the market, grown-ups in the market, is the US regulation looks quite sensible. Yeah. That would be my kind of counter challenge, right? We shouldn't consult on this for 3 years, right?
Yeah.
If they've already got the right answer, we need to catch up.
Good.
So it's kind of like by exception, you must demonstrate why this can't be true.
Rather than,
yeah,
let's just be cautious.
Yeah, we have a great consultant. He talks about impeaching, right? So in other words, one way to cut through the bureaucratic crap is basically if someone says something, if someone disagrees with it, they have to impeach it. In other words, they have to argue against it. You can't just kill it by committee, right? Somebody has to stand up and say, this is why this can't be true. And that's the approach I'd use in this case.
Okay.
We don't really have time to do anything else.
This is a slightly random one, but who's a fintech in the market that you really, really respect, if you had to pick one?
We're all in awe of Revolut. Grown-ups are. Revolut builds as a feature what the rest of us build as a business. Yeah. You can build a unicorn free stock trading and they'll build it as a feature in a quarter. They have this extraordinary ability to execute at scale, dozens of geographies, dozens of products. It's an extraordinary company, and I don't, I do actually think it potentially is the Amazon of financial services because it's fundamentally so disruptive. So my kind of my intellectual framework for explaining Revolut is this: you can think about them almost as a freemium business. Right, so I have a Revolut account because I bought some crypto when I was bored during COVID. But the point is basically they probably don't make much money from me. In fact, they don't make any money from me. But they already have 50 million customers. They're on track to 100 million customers very quickly. If only 10% of their customers deliver bank level revenues, right? So there's kind of revenue per customer a real bank would expect, not a grown-up bank. Then they've got 10 million proper banking customers. They're already a very big business. Very few banks have 10 million bank level customers, right? So if you intellectually frame them as a freemium company, and maybe one day I will eventually find a killer thing that Revolut does that where I move a substantial part of my assets towards them, right? But the point is basically that intellectual framework. Don't look at the average value per customer. Think what would happen if 10% of their customers make as much as a JP Morgan customer, and then suddenly you're like, wow, okay. We're all in awe of Revolut. I certainly am. And all the grown-ups I know in fintech.
Yeah, I mean, the ability, as you say, to launch new features and new offerings, the pace and scale of it is ridiculous.
Yeah.
What's the plan for Allica? What would be success for you? Obviously, it's been successful so far, if money would say, but what would you deem the end goal to be as I've done a good job here? This has been...
Our answer to this one tends to be the kind of fashionable, evasive answer, but I think in our case, it's genuinely true. We believe in focusing on just building a great business for our customers, and then the rest comes through. So we often get asked about exits, valuations, etc. We think all of those things naturally happen as a result of building a great business. And I like to think we have built a great business. If you want a more tangible answer, the real questions we face now are, should we build a great business outside the UK, right? That's a real question, right? And a question to which I can't give you an answer, but there's a question, right? But do I think we've got the foundations, the flywheel for great business in the UK? I think, yes, we do already. We know because we're a flywheel business like Amazon, we're designed to get better as we scale, better on all dimensions, customer experience, revenue, efficiency. Then as long as we keep growing our customer base, which grows very quickly, then there's no obvious reason why our business won't become a great business. It's hard to see. It's hard to see that not happening where we are now. But at the moment, we're just the UK, and there's a question. Right, we'll see.
Nice way to end on. I think they're a nice little cliffhanger. So thank you for joining us today, Conrad. I've really enjoyed this.
Thank you.